my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited. Here's your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil markets. I'll start with Paris rapeseed. 5 weeks ago we had a weekly key reversal up. I mentioned it at the time and I was unsure about it because the following week prices traded with indecisive spinning tops and indecisive doji crosses all that week, bar the Wednesday. It was the week after Easter and it seemed everyone was taking it easy a bit. However, Tuesday 3 weeks ago saw a big move higher, breaching the 2013 high at 464.25. On the Wednesday, prices started really motoring higher with new highs not seen since early last decade. The bullish move higher continued with prices peaking over the upper tine, currently 520.5, of the February to March bullish Andrews pitchfork 2 weeks ago. Now, I said at the time I was not convinced of the lower or upper tines of this pattern. However, it seems the market recognised this, with only one close that week above the upper tine, and a subsequent drop brought on by the bearish engulfing pattern type, halting at the lower tine, currently 487.25, and reversing back up in a hammer pattern. This was a seminal moment, as from this has grown a rally that today has gapped through the congestion from December 2020 between 513.75 and 519.5, and now broken through the all-time high from July 2012 at 524.75 and also closed over it. As you can see, it has messed up my daily chart quite a bit, as I've had to draw fresh projected supports and resistances into this new territory. Let's start with the obvious. We have a late March to late April bullish shift pitchfork, which the market has promptly utilised today as the high at 533.25. It's right on the upper tine. This is a first effort, so if the bullish shift pitchfork doesn't work, well then I will draw a more acute bullish Andrews pitchfork. The only reason I haven't right now is because the chart is already a mess and this would clutter it up completely. Next, the market has already punched up through the first overhead projected 50% Fibonacci line at 527.25. We now have overhead the 100% projected Fibonacci line at 544.25 and the larger pattern 50% projected Fibonacci line at 548 even, a little above that now. Now then, assuming that this gap up is not an island, what more can we expect on the upside? Well, it is very, very early, but if we look at the late March to date action as a possible bullish halfway hesitation pattern, then we could have a potential topside target X in the 553 area. I'll let that sink in for a moment. As I've said, this is very much on the edge of my analysis and I'm a bit loath to mention it, other than I would look even more stupid if it happened and I didn't, and it all depends on the latest action not being an island. Winnipeg canola. 3 weeks ago the market shot up off the combination of the uptrend, the short medium moving average currently at 774.70 and the short moving average currently at 831.40. 2 weeks ago the market breached the previous all-time high back in March 2008 at 770 even. Last week the market hesitated. Please remember this, as it may become important shortly in deciding what's next. But by last Friday we'd made a new all-time high and high close. This week the market has rocketed higher, notably yesterday gapping higher and punching up and closing above the upper tine, currently 909.90 of the January to March bullish Andrews pitchfork. There is not a more acute pitchfork currently available. So I've started to rely on projected Fibonacci levels, and of the three that I've drawn, the market's punched up through all three 50% projected Fibonacci levels, the last one being today at 956.5, and 100% projected Fibonacci level at 940.60, also today. That leaves the projected 100% Fibonacci levels at 987.20 and 1049.70. Not an ideal situation. So what else can I say? Well, there is one possible pattern here that I have seen elsewhere in oilseeds and vegetable oils, but it is a tenuous one. So if we were to look at the action from when this started higher, not the previously mentioned start, which was actually on Monday the 12th of April, but from the March low up to today, as a possible diaphanous, very acute, probably very unlikely, bullish halfway hesitation, with last week as the previously mentioned hesitation, then a possible target X, a maybe, very maybe target X, is in the 987.20 area, coincident with the next projected 100% Fibonacci line. By the way, if we use the 12th of April instead, well, we would already have achieved it. So if tomorrow, or at least the latest Monday, prices fall away, then the 12th would have been right instead. Bursa Malaysia crude palm oil. So we have a mid-October 2020 to late January 2021 bullish shift pitchfork showing the bullish angle of attack of this market, particularly the middle time, currently at 41.68. Additionally, we have a newer, slightly more acute bullish shift pitchfork for the January to late March move with the middle time, currently 43.22, capping the market until this week. The market is now above both middle times, acting as support, with plenty of gaps in between, and moving up to tackle the all-time high in March 2008 at 44.84. Question now is, what should happen if we break that 44.84 high? Well, we have three levels to look at and one possible pattern that I still find, well, awkward. Three on top are the upper tine of the bullish shift pitchfork, currently at 45.89, the upper tine of the bullish Andrews pitchfork, currently at 46.83, and the projected 50% Fibonacci line at 46.13. There's also a possible pattern, this awkward and obtuse one. If we were to look at the action from the January low to date as a possible bullish halfway hesitation pattern, then we may have a possible target X in the 46.75 area. It is a big ask, I know, and the first thing we have to verify will be in the next day or so. With the last three gaps over the last 3 weeks not being a 3-gap move higher, because if they are, or were, then we may well already have reached the zenith. Caution, lots of caution, and watch carefully. Thank you for listening. This weekly broadcast gives the essential patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.